Let's get a round of applause.
All right, good afternoon, everybody. Welcome to Nashville. It is Sunday, February 2nd. Matt, Brian, we're crashing your party again this year. Thank you.
Thanks for having us.
So
It's hard to crash a party when you're invited, Joe. Come on.
That's true. I was invited. The trick to this taping today is that we talk about news on the podcast, and the news is moving very, very quickly. So I'm going to timestamp this whole thing. We're taping on Sunday. It's 4 p.m. Central Time. By the time the public crowd hears this on Sunday morning at 6 a.m., everything could be totally different. So we're telling you what we know right now. With that, let's get into the hot topic of the day, Mackenzie.
So as promised, President Trump slapped tariffs on Mexico, Canada, and China on Saturday. Trump imposed tariffs of 25% on Mexican and Canadian imports and a 10% tariff on Chinese imports. The tariffs are slated to take effect on Tuesday. Trump stated that the tariffs will remain in place until the influx of fentanyl and illegal immigration stops coming into the U.S. He also said that if any of the countries retaliate against American exports, the tariffs would likely increase. More tariffs on additional countries are expected, as Trump said late last week that he plans to add tariffs on steel, aluminum, semiconductor chips, and pharmaceuticals.
This is what Trump said on Truth Social, I believe, yesterday. Today, I have implemented a 25% tariff on imports from Mexico and Canada, 10% on Canadian energy, and a 10% additional tariff on China. This was done through the International Emergency Economic Powers Act because of the major threat of illegal aliens and deadly drugs killing our citizens, including fentanyl. We need to protect our citizens, and it is my duty as president to ensure the safety of all. I made a promise on my campaign to stop the flow of illegal aliens and drugs from pouring across our borders, and Americans overwhelmingly voted in favor of it. Guys, we're not going to talk about tariffs as it relates to a policy. This is what it is. We're more interested in the markets and the impact. Before we get into specifics, Matt, what do you think the tone is going to be coming into a new week here?
Yeah, I think you're going to have some pressure right off the bat. There's no question in my mind that traders will be a little skeptical. I thought it was very interesting last week up to midweek. It seemed like fund traders were unfazed by this potential news. And so all of a sudden you come in here towards the end of the week. Reuters came out with a story towards the end of the week, I believe on Friday, and said actually this is going to get implemented as of the weekend. And now they're talking implementation on Tuesday. We saw the Colombian deal. That all resolved itself rather rapidly. So I guess this has not been implemented yet. We have to understand that. But at the same time, I do like the tone, I think more so for Mexico than the other two, and that they said, hey, maybe we can sit down and talk a little bit. But all three parties are talking about retaliatory efforts.
Brian, you can't really say that this was a surprise, yet it seems like some people are acting as if it's a surprise.
Right, so obviously the funds have accumulated a rather long position in corn, and they just recently, as of the beginning of the year, are now long soybeans. And I don't think that the implementation of tariffs is going to be a surprise to any of the the big money, the smart money that's involved in the market. So we'll see how much of a reaction there is, when we open up tonight. I can tell you that based on how we traded on Friday, whether it was old crop corn, old crop soybeans, new crop corn, new crop soybeans, all four products went essentially to their uptrends that have been in place and held. And so with some of the opening calls that I've been seeing, if we do open as much lower as what they are suggesting, and we'll see if we do, we could have some gaps on the chart to the downside, gapping over support. The only product that has a gap currently was left on corn from Thursday into Friday's trade. So that would then have two gaps on its chart if that comes to fruition. So we'll see how it works out tonight.
So given what you're saying, there must be a contingent of traders out there who thought Trump was either bluffing or that there was going to be negotiation.
Right, and I think we saw how Colombia and that got resolved very quickly, and we made some lows Sunday night into Monday's trade, and then they ended up buying it the rest of the day, recovering off of lows, still finishing lower, but then making new highs later in the week. I think this situation is extremely fluid, and a lot of this news is dropping over the weekend, or it drops after the markets close during the week. And so I would expect that one of the things that Dan Bozzi said earlier today is that we are likely going to see a tremendous amount of volatility, and I think the information flow is going to be very volatile as well.
Okay, let's go to the retaliation or potential retaliation.
According to Canada's Prime Minister, the nation will implement 25% tariffs on $106 billion worth of U.S. products. The products will range from appliances to lumber. About a quarter of the tariffs will be implemented on Tuesday, with the rest following in 3 weeks. Mexico is considering retaliatory tariffs, but has released no specific details. China has vowed to take legal action through the WTO. However, the nation did refrain from threatening counter-tariffs.
Okay, so our crowd here in Nashville, and also our crowd watching on YouTube or listening on the podcast, they're interested in the corn and soybean markets, right? Okay, here's kind of the crux of the issue here. When it comes to the corn export market, Mexico has been our biggest buyer this year, and we've only shipped to Mexico about half of what they bought. We've got 312 million bushels worth of unshipped sales. Is this something we're supposed to be concerned about?
Yeah, I mean, I would be more concerned, I think, if Mexico once again hadn't come out and said, hey, we are not going to announce anything yet as far as retaliation goes, but at the same time, we are willing to sit down and talk about the situation. Mexico knows that this is a mutually beneficial relationship that we have. We have a rail system that goes through the central part of the U.S., specifically designed to take corn. They've been a huge purchaser of corn so far, and as Dan has said, absolutely, we can't afford to lose that business. And so I do believe that moving forward, they're still going to take corn. It's just a matter of maybe partial negotiation, but I am concerned about it, but at the same time, I want to see what the implementation looks like and see what Mexico's language is like on the flip side.
Okay, so with regard to retaliation so far, for the record, Mexico hasn't mentioned grain or corn. That doesn't mean that they couldn't retaliate and do that. Brian, do you think the market's worried about this?
I think the market's worried about it. I don't know if they should be. I guess part of my thought process is, I mean, there's a lot of narrative going around earlier with how much corn Mexico was buying, that they were trying to front run the tariffs. Mm-hmm. And I think with the drought that they had last year, that they probably like to take delivery of all of the bushels of corn that they purchased. Now, how the market sees that might be more of an element of how heavily weighted the funds are in corn currently. I think because of the size of the position, it just makes it a little bit more vulnerable. And we've had a pretty tremendous rally in a short period of time. So I think we're probably due for a correction anyway. This might give us that little nudge to get that correction, but I still think some of the longer things going on in the corn market will lead buyers to come in at lower levels.
Okay, so as it relates to corn, Mexico is maybe our concern. Soybeans, China, of course, is the concern. For the current marketing year, which ends at the end of August, U.S. exporters have already shipped, I think, 88% of what's on the books, but we've still got 90 million bushels worth of unshipped soybean sales to China. Is this something we're supposed to be worried about?
Yeah, I think initially, whenever it comes to China, one thing I look at is, you know, their economy was in significantly better position the last time we placed tariffs on them than what it is in this particular situation. I don't know if the countermeasures are going to be as drastic as what we saw the last time around, but by all means, the problem that you have, Joe, is if you have 90 million bushels that are unshipped, clearly Brazil has started harvest. Brazil has a monster crop. We've heard about it 3 different times today. And so with that being the case, there's no question in my mind, some of these could be called into action. China has done this before, canceling soybean sales or shipments, if you will, after sales were purchases were made previously is not something that they're new to doing. And so I would certainly not put it past them. I'm not super concerned about it just yet. Again, I think it's early, it's fluid.
Brian, you may have to look over my screen here, but this is what the corn chart for March futures looked like as of Friday's close. And again, we're taping Sunday, so we don't know what Sunday night, Monday morning is going to look like. Does that gap on the chart, is that a big problem for you?
It is, and I think the longer we go without filling that gap, the more problematic it becomes. And I think depending on how we open tonight, that low, you could see there's kind of 2 trend lines there. That upper trend line that's a little bit more shallow in angle, that comes off of a low that was made at what was it, 477 3/4. And with some of the opening calls that I've seen, if we open as low as what some of those calls suggest, we would actually gap over that low that was made, and that would become very problematic. And I think then we're going to be very quickly possibly looking to retest the highs that we were making prior to the January report, which for March would be around the 460 area. And I think that's where buyers are going to emerge again and be willing to step in and risk below the lows that we were making prior to that report, which is in the 450 vicinity.
All right, here's the same chart for soybeans, March 25 daily through Friday's close. And I guess based on this, maybe we held some trend support on Friday, but this may again look different by Monday morning.
Right, so again, that was the theme, was trend line support was holding on Friday's lows. If we do have a sharply lower opening, as some are suggesting, and again, we'll see, we could very well be taking out last week's lows, taking out trend line support. I think another thing that I'm going to be mindful of looking at is how the soybeans interact with the 100-day moving average. The 100-day moving average was something that they were selling against, whether it was the fall highs, whether it was the November high that we had from a bullish November WASDE report, and then the January report got us through the 100-day moving average. So I would like to see the fund manager willing to continue to buy against the 100-day, but if they don't, then that again suggests that we're now respecting that as resistance once again.
Okay, that's a good segue into our next story, which is the funds.
Yep, so the funds increased their net long position in the corn and soybean markets last week. During the week ending Tuesday, January 28th, large money managers were net buyers of 22,000 corn contracts. The net long of 344,000 contracts is the largest since April 2022. The funds were also net buyers of 7,000 contracts of soybeans and net sellers of 17,000 contracts of SRW wheat on the week.
Okay, this chart is corn managed net. This is the fund net position in the corn market, which is approaching record levels, which is shocking if you go back 3 or 4 months, and nobody would have thought that this was happening. I think the common narrative out there right now, guys, is that, oh my gosh, the funds are almost record long, and now we've got this tariff story, and the funds are going to come in and puke this up and kill the market. Is that what's going to happen?
I'm not sure that's going to happen. They've seemed to be very interested in owning commodities in here. I think part of it was like a tariff type pseudo-inflationary hedge, first of all. And the other thing that I would look at, Joe, to not get super worried about this fund long is that, we know whenever the market really is going to take off and rally, the farmer typically has had the corn extracted from their hands. And we all know there's been a significant amount of selling over the last several weeks, but especially since the January report. And so the farmer has less corn in their hands than what they had before. Hedge pressure might not be such a thing. So I'm not so sure that the funds are going to puke just yet. I think they're going to want to take a look and see what's going to happen if Safrinha hasn't gotten into the ground as quickly as what they were wanting to see. The other thing is what we just heard about earlier today from Eric Snodgrass. There's a lot of talk about weather concerns for this year. So I don't think the fund manager necessarily wants to get out of that long yet. I think there's things they want to see happen first.
I think the farmers absolutely sold a whole bunch of corn, and this next chart may speak to that. Here is the CFTC data, corn, the producer, merchant, processor, user category. So when a farmer sells to the elevator or the ethanol plant, they go and sell the board, and that's what you're seeing here. You've got a massive, massive net short position among the commercials. Brian, what does that mean to you? Does it mean that the market has an easier time rallying now that the farmer owns less corn?
Well, to Matt's point, I've always been taught from the early part of my career that the market rallies once the product leaves weak hands, and unfortunately in that explanation, weak hands is the producer hands, and then once it's in strong hands, which would be the commercial hands, that is when you see the best part of the rally. So I think what that signifies is that we've seen an awful lot of corn leave the producer's hands through fall into late 2024, and then quite a bit more as we have broken into 2025 and seen $5 corn for the first time in quite some time. So I do think that the market is ripe for a little bit of a pullback, but for those of you that may have sold some physical at levels lower than we are right now, that might be part of the buyer that shows up at lower levels looking for some call ownership, looking for some re-ownership of sales that were made, because we do have some things in the big picture in the long term that could still be friendly in the market.
All right, let's shift gears a little bit and go south.
So Argentina's soybean crop is likely worse than reported. Earth Daily Analytics, a company that tracks crop conditions using satellite images, estimates the crop at just 45 million metric tons. The forecast is much lower than the Buenos Aires Grain Exchange's estimate of 49.6 and the USDA's forecast of 52. Rainfall is forecast in the coming days, however, it is expected to be minimal. Last week, consulting group Patria Agronegocios reported that farmers had harvested roughly 10% of this season's crop, down substantially from about 17% last year.
All right, guys, I've got some weather maps we're going to run through, and then I've got some production charts. This is from my friends at Crop Profit. So this is rainfall as a percent of normal, 30 days ending January 31st. Brazil is really in pretty darn good shape, maybe barring far southern areas. And I think those far southern areas in Argentina, if there is a problem, that's kind of your problem area.
No, absolutely. I think whenever you look at this as a whole, though, Joe, let's say you shave 6-7 million tons off of Argentina. We all know that last year's crop to this year's crop for Brazil looks like an increase of anywhere from 15 to even 20 million tons. And so the overall South American production is certainly going to go up. Now, whenever Argentina has issues, we all know soybean meal typically posts some sort of a rally because they ship so much soybean meal on the world market. That's something we've seen of late. But at the same time, we got to look at total soybean production. When you look at world numbers right now, we're swimming in beans. So even if Argentina takes a little bit of a hit, the long-term implications price-wise, in my opinion, aren't necessarily bullish anyway.
Brian, here's the forecast for Argentina next 14 days. There are definitely some dry pockets, and they've been dry. Do you think the concern, or if there's a concern in Argentina, is that enough to counteract the tariff news to any extent?
I do, and you know, one of the things that Mr. Snodgrass taught us was that drought begets drought, and so I think that's why when you have dry conditions like this, even though there's a forecast for rain, the market may not trade it as aggressively until you see the rain fall, because a lot of times these forecasts really underperform. So when I think about from a product side and what will potentially improve crush margins, it is the meal. And so if we have a severe reduction of the Argentine soybean crop, that then reduces the amount of meal that's going to be exported from Argentina. That then will improve the crush margins domestically. And I think we also have to kind of compare this to where we were a few months ago, and maybe not even a few months ago, but just a month ago when soybeans were making new lows. I think the market was trying to price in something in the upper 170s for the Brazilian crop. So I think since then we've seen Argentina go backwards, and I would argue that Brazil has also gone backwards to an extent, not in Mato Grosso, but some of those central southern growing regions. So I think, yes, the crop is going to be larger out of South America than what we saw last year. We've known that for a long time, but I think it's smaller than what we thought it was just a month ago.
I'll do the Brazil map real quick. I don't see anything that's threatening or problematic here. I threw a couple charts in today. Here's soybean production. Your white line is the United States. Your green bars here would be Brazil and Argentina combined. So we're talking 221 million metric tons out of Brazil and Argentina, and that's USDA's most recent estimate. Are you guys thinking slightly lower than that at this point?
I mean, it's tough to tell. You don't know what the weather is going to finish like with Argentina. We know Argentina is behind Brazil as far as when all the soybeans are going to get harvested. Yes, they've gotten a start there, but Brazil will be much farther along. In my opinion, if Argentina takes a ding, you know, maybe you could take that down a couple, three. But I'm afraid that maybe the USDA is a little bit low at 169 on Brazil. So if they're a little high on Argentina, maybe it's not going to be such a large swing.
I think USDA, like if you had to put an over-under on it, I think that 221 is like a pretty decent over-under. Brian, what is your thought?
I think they're probably pretty close. They were very reluctant and to increase Brazil through all of the good weather that they had. They didn't move it from 169. And so one of the things that I think about as it relates to Argentina, where they're dry, is again something that Mr. Snodgrass pointed out, is that when droughts do end, they end violently. And one of the things, and my brain thinks about where we are on the chart as well, and one of the things that we did for soybean meal is we set a monthly reversal, and I'll show you guys this stuff tomorrow, but we basically bottomed meal in the month of December where we had bottomed meal during COVID in 2020. And if the drought in Argentina breaks, and it breaks violently, we could potentially see a repeat of what happened in 2016, which was severe rain events during harvest, which caused a probably between 5 to 7 million ton loss of beans. So if this drought breaks late in the cycle, and it gives us a problem with the Argentine beans. I think that's something that's going to get this meal market very excited to the upside.
I did the same chart for corn just to give you guys some context. So the U.S., of course, is still king and by a wide margin when it comes to corn production. But that second Brazilian crop in particular, I think is something that could matter. It looks like maybe they're going to get kind of a late start to planting. Is this something you think the trade's concerned about?
I mean, we definitely have to watch that. The thing about that safrinha crop is when it doesn't go in the ground in a timely fashion, you get into the dry season on the heels of pollination. And so you want to get that crop into the ground as early as possible. I mean, we'll hear about this more tomorrow with a Brazilian that's going to be here talking to us about production. But, yields are vastly different than what they are in the U.S. They just continue to plant more corn. And as we heard today, it's worth a lot more to the Brazilian grower than what it is to the U.S. grower. So I think that it's very important you get all the acres you can possibly get, especially if they don't go into the ground in a timely fashion. So that's part of the reason I believe that the funds have been waiting around. They want to see if that crop gets in the ground quick enough that they feel confident it'll be able to get to maturity before we get into dry season.
The difference between the two right now is pretty drastic when it comes to competitiveness. U.S. corn is going to be competitive on the export market for months to come, whereas soybeans are already not really competitive out of the U.S. compared to Brazil. We've got a cattle story, a couple of them.
We sure do. The U.S. will resume Mexican feeder cattle imports in the next few days. Imports were suspended back in November after New World screwworm was discovered in a cow in southern Mexico. The restriction has further tightened the already limited supply of U.S. feeder cattle in recent months. On Friday, the USDA's annual cattle inventory report showed that the U.S. cattle herd has declined to its lowest level since 1951. It also revealed that replacement heifer retention has yet to begin. The report further reinforces the strong market fundamentals that have driven cattle prices to record highs.
So I guess you've got one that this is a bearish story, the Mexico imports, and then this is a friendly story, but maybe kind of a known.
Yeah, you could call that Mexican feeder cattle story bearish somewhat, but they are going to start bringing in cattle slowly, so they're not just going to flood us with cattle to start with. But as you just said, that USDA report, our cattle numbers are still record low, and we knew it was coming. And no one's keeping heifers either, so I mean it's going to be years before we rebuild our cattle herd.
Matt, cattle market thoughts?
Yeah, I mean, it just takes a long time, as Kinsey just said. I mean, it takes years to build a cattle herd, and anybody who's got heifers to sell, and someone's offering $200 or $2,500 for a heifer instead of waiting to see whether she can get a good calf on the ground or not, it's crazy to even pass that kind of money up. So my thoughts on the market, though, is that it's still elevated. I mean, we've never seen $200 fast before the last 2 weeks. So I think you've got to stay protected. If you want to stay bullish up here, I would be very cautious in that thinking.
Brian, I know you've got something to say about cattle technicals.
Matt touched on 200. That was a record level. Once we took out 200 to the upside, we really haven't looked back. We made new record highs after that. Funds are holding record length in both live cattle and feeder cattle. And I think this market right now, because of the velocity that it has, but yet also because of the fund position, this is a no-brainer where if you have risk in the cattle market, you just strictly want to own puts. I really don't even think they're that expensive for the lofty levels that we're at, and you can leave the upside open, not have margin calls. But I do think that if this market decides to break, and we all remember if you're involved in the cattle, the break that we had basically from September of 2023 to December of 2023, that's probably the type of break that's in store for us once the market gives up. I don't know if it's right here, right now, but I think put ownership, just a little bit out of the money can do wonders for somebody with risk in that market.
That's all we got for today, guys. For the live crowd here in Nashville, we appreciate you having us. For you guys watching on YouTube or listening on the podcast, we'll be back to our normal schedule on Tuesday. Take it easy, guys.